Hey guys, Joe Frank here, market analyst for YouTrading, and in today's video we're going to be taking a quick look across markets, having a quick catch up of what's been going on in the market this week, talking about some of the themes that are coming up for the rest of the week. So let's jump right into it. You can see here the US dollar index under pressure on Wednesday. It had a little pop higher on Monday, but it's now more than reversed those earlier weekly gains. Looks like it's potentially going to retest these annual lows. Um, but we're going to have to wait and see what happens with the upcoming Fed meeting. This is key. Um, later today, the US Federal Reserve is expected to deliver its 10th consecutive rate hike. It's going to take interest rates, this is what the market's expecting, to the 5 to 5.25% range, as you can see there, from the 4.75 to 5% range that it's currently in. That will mark 5% worth of rate hikes since the hiking cycle started last March, so in just over a year. But the Fed is expected to very much keep its optionality open. Powell's not expected to outright signal that more tightening is definitely coming. He's not expected to outright signal that a pause in interest rate hikes is definitely coming. They want to keep optionality because on the one hand, you've got inflation, which is still sticky, labor market, which, labor or job openings are dropping, which is an early sign of labour market weakness. But other metrics of the labour market, like this ADP number we just had, strong, nearly 300k, better than expected. And we've got the jobs data on Friday as well, which should show that the unemployment rate remains low, the average hourly earnings growth remains robust. Pretty much labour market still in a decent place. Inflation still way above the Fed's target. So that's on the one hand, that's the argument to keep hiking because the economy at the moment warrants it. But on the other hand, we've got these bank crisis risks. First Republic went under this week. A couple of other banks might be going under soon as well. That might warrant a Fed pause. So they want to keep their options open. Depending upon the tone, we're going to see the dollar impacted. And other asset classes as well. We'll go through them in a second. But you can see here that the stronger than expected ADP data that we had earlier today, and also a pretty robust ISM Services PMI report, have failed to prop up the dollar. Let's have a look at some other asset classes then. Stocks had a bit of a sell-off yesterday. That wobble was mostly to do with bank crisis concerns. First Republic going down recently, being bought out by JP Morgan after being taken into receivership. Now you've got other banks that might potentially be going under as well, like I was just saying. But stabilizing around the 21-day moving average ahead of the Fed meeting. NASDAQ, similar story, stabilizing just above the 21-day moving average ahead of the Fed meeting. Yields, 2-year yields not moving too much, but certainly below earlier weekly highs. 10-year yields are heading lower though. As you can see here, they're about 5 basis points lower. This is potentially weighing on the dollar, to be honest. And why are they heading lower? Actually, could be to do with oil prices, which continue to collapse, with analysts talking about rising expectations for a recession later this year in the US as the Fed continues to lift interest rates. But let's finally take a quick look at gold. You can see it continues to rally. Seems like it's pushing to the north of this resistance area, which I flagged as potentially important in yesterday's trade idea video. That trade looks like it's actually potentially going to play out nicely, which is always good. We've got this upwards trend channel for gold. If the dollar keeps going down, if yields keep going down, I think gold is potentially in for a test of this all-time high area. Actually, the all-time highs are from 2020. But yeah, we're not far below those areas now. If the dollar keeps going lower, yields keep going lower because of bank crisis concerns, you could see gold continue to go higher. But in terms of what else we got this week, aside from today's Fed meeting, ECB tomorrow, then Bank of Canada governor speaking if you're a loony trader. A few more bits and bobs being released from the RBA after they actually unexpectedly lifted interest rates earlier this week. Canadian jobs data, and then, as we've already talked about, the key US jobs report, which, judging from the ADP number, could surprise to the upside, which could potentially lift the dollar a little bit. But yeah, guys, that's pretty much what's been going on so far this week and what we have ahead for the rest of the week. I hope you all found this video informative and enjoyable, and I will see you all in the next one.